Good evening, everybody. Hope everybody's having a nice summer evening. Tonight we've got the good fortune to have Mish Schneider with us. She is an excellent swing trader. Her background is that she's the head swing trader at Market Gauge, and she's going to show us some of the techniques that she finds for finding the big swing trades. And she uses this technique, which she calls market phases. She's an ex-floor trader, former member of the and trader of coffee, sugar, and cocoa on the NYMEX and the COMEX in New York City. Also a former market analyst for Continental Grain and a former floor analyst for Conti Commodities. She's got over 30 years of trading experience. She runs her own money, and she also manages a hedge fund. So with that, Mish, we're very anxious to see what your techniques are. Welcome to the Candlestick Forums.
Thank you, Steve, for that lovely introduction. Welcome, everybody. Hope everybody's feeling well on this beautiful night. I'm in New York City right now, but we actually live in New Mexico, so we've been here for the last couple of months. And also, I want to welcome everybody, considering how interesting the market is, and especially at this time of year when notoriously the market sells off in the summer. We're actually been enjoying quite the summer rally. So this is a really good time to actually be doing this and hopefully give you some good information for you to take back with you. So you're looking at the slide here. That's me up there. And one of the reasons why I do this is because when I got started, I got a lot of help from people down on the commodities exchange, people who had really no incentive to help me other than out of the goodness of their heart. And I have found in this business that people do tend to give back, and it's a very tough business, and so I really enjoy, besides the fact of trading and making money and enjoying a good portfolio, what feeds me the most is really being able to help people, because I feel for people who get into this business either uneducated or following what they think is the next hot ticket and then winding up losing everything and being completely unaware of why that happened. So we're going to look right here now and see that one of the quotes that I've gotten recently is just about this, is changing people's lives, and that's really what I'm in the business of doing besides trading. So if I can change people's lives and trade at the same time, doesn't get better than that. So what I'm going to show you tonight are some of the key ingredients as to what I use for trading in swing mode. And essentially, everybody knows about bull markets and bear markets, but I'm going to talk to you a lot about the in-between markets and also really help you see how to pinpoint when to enter the market, because let's face it, anybody can buy at any particular time or sell at any particular time. But knowing exactly when to enter the market and being able to control your risk is really the key. And so also, what I get questioned on all the time is what happens when something gaps against you. So I'm going to talk a little bit about how we prevent that from happening in terms of a real drawdown to your equity. And that's really by understanding risk reward and where to put stops. So all of this is meant to get you to not think that you're going to make money on every single trade, because that's unrealistic, but to understand that if you know just a few things that I'm going to show you tonight, you can time your way in, have a minimal amount of risk with a maximum amount of gain. So what you see there is a picture of me as a young pup. This was when I was in coffee, sugar, and cocoa down on New York Commodity Exchange. And I'm showing you this picture for two reasons. One is, what you can see that I'm holding in my hand with a better picture of it to the right of that is a point and figure chart. And so I actually started being a bit of a dinosaur before we had all the fancy technology that we have now to be able to chart using all the software, when we had to sit there and actually do point and figure charts if you were a day trader, which is what I started out as a day trader. And so I think a couple of things happened from that. Number one is I got to employ a kinesthetic sense. We all learn from our visual and from our auditory sense, but with the use of computers, one of the things that have been taken away is the ability to actually learn through your fine motor coordination or through your kinesthetic sense. And this really has given me a foundation that has stayed with me for all these years. Even though I'm watching 1-minute ticks and 5-minute candlesticks and everything else I'm going to show you later on, in my mind's eye, I am still seeing what happens on point and figures. The other reason why I'm showing you this picture is just a little bit more of a background on who I am. I did not get an MBA from Wharton School of Finance or anything like that. I lived in Queens, New York, grew up with a father who was a mailman. I was good in school, so I was told become a teacher, which is what I did. I actually went into special education, and I stayed in special education for a while. I have a master's in that. Eventually meeting somebody who said, hey, I work on the Commodities Exchange, you want to come down for a visit? I did, and the light bulb went off in my head, and I was like, this is where I need to be. This is what I was fated for. And so with no formal finance education, coming from a teaching background, got really, really lucky, got a great job with Continental Grain and Conti Commodities, went down there, borrowed money to start trading, and here I am all these years later. So I tell you this because it really doesn't matter. This is definitely the purest form of capitalism. It doesn't matter who you are, where you come from, or what you start with. If you know what you're doing, you can definitely be successful. So this is just some of the great adoration I've gotten, but I want to share with you for reasons. This is amazing for people who are new, but it's also amazing for people who have been doing this for a long time. It's incredibly simplistic. Obviously, we can all get a lot more complicated, but I try to keep it simple. And what I do, like I said to you early on, was I really try to help people. That is my #1 motivation, because I do believe that the special education degree that I got and my love of teaching combined with my love of trading is the reason why I've been put on this planet. So you can read here some of the nice things I've gotten from people for yourself. Let's move on. So where does it all begin? It begins with market phases, and I said to you before that most people are very well aware of the two basic phases, the bullish phase and the bearish phase. And you can see that I have this depicted as a circular graph, or like actually a clock, because everything in life is cyclical. Everything in nature is cyclical, and everything in the markets are cyclical. So if we think of this like a clock, and we start at high noon here, and that's when everything is bullish, that's going to be obviously the phase that we're in right now in the current market in the 4 indices. And that has been something that we have actually been in with a couple of snags here and there for quite some time. But at some point, like again, everything in nature, things do deteriorate. And at that point, we go into a warning phase. And a warning phase is simply that, not necessarily sell everything, the market is over, but maybe it's a good time for me to take some profits on some of my long positions and hold off on buying new positions. Maybe it's even time for me to start looking at some short positions. Then things deteriorate further. We go into a distribution phase. Now things are really starting to fall apart, so eventually they get down into a bearish phase. We haven't seen a real bearish phase in the market since 2008. But of course, once again, as everything is cyclical, things start to improve. We're an incredibly optimistic people. That's what makes humans so great, is we live on hope. We try not to trade on hope, but we live on hope. And because of that hope and a collective consciousness, eventually we get back into a recovery phase as things continue to improve, an accumulation phase, and there we go back into the cycle of bullish phase. So how are all of these determined? Essentially, it is extremely simple. I like to use 2 daily moving averages that are simple moving averages, not exponential, but simple. And that is the 50 and the 200 daily moving average. And I look at these in 3 ways. Now, we're going to talk about the bullish phase here, but when I show you some examples, you'll see some of these other phases that I just showed you in that circular graph. When we are in a bullish phase, and by the way, I'm assuming that most people know what a moving average is, but in case some of you are brand new to trading, I will just tell you very quickly, because you hear it all the time about moving averages. They are lagging indicators. And they're lagging indication of where price has been over, say, the last 50 days or the last 200 days. We can make a lot of conjecture about where prices are going based on these three things. One is the position of how each of them relate to one another. So, in a bullish phase, the 50 has to be above the 200. So we'll call this the 50, and we'll call this the 200. And so in a bullish phase, that 50 is going to be above the 200. Second, and this is simple physics, is the slope. I don't hear too many people talking about slope, but it's incredibly important. So much of the market relates to simple physics, momentum, compression, and slope is certainly a part of it, because as the slope goes up, so does the velocity of the actual movement in the market itself. And so what you want to see in a strong bull phase is the 50 above the 200 and both of these moving averages sloping up. Finally, you want to look at price. And I say finally because it's certainly the most important thing, but the last thing I'm going to cover on this particular slide. The price has to be relatively near the moving averages, and this is really where your risk reward starts to come into play. So I'm sitting down, I'm checking my charts, I see my 50s above my 200 as I'm looking, say, at the S&P 500. I see they're both sloping up. Oh, this is fantastic. We're in a strong bull phase. I'm going to go buy some. But guess what? The price is all the way up here. Is that a good time to buy? I hope you're all saying to yourself, no. Why? For a very simple reason. Unless you are so equipped and a master of understanding short-term price patterns and movement and where else you might put a risk, you run the risk of this running all the way down to the 50-day moving average. And my God, we certainly have seen plenty of that in 2014. We've even seen it break the 50-day moving average only to turn back around. So your risk becomes tremendously high compared to what your profit potential is, because I can tell you right now, if price is up here and moving average is here, most likely you're getting into overbought territory. And once something gets overbought, it's ripe for a correction. So what you want, ideally, is for your price to be somewhere close to the 50-day moving average so that you know that you're getting in with a minimal amount of risk. In other words, you're getting in knowing that if it breaks the 50, you can get out pretty quickly because maybe you were wrong about that correction. Not just a correction to the 50, but actually starting to deteriorate into that warning phase. Or it's been in a warning phase, it gets back over the 50, and you're at an incredible inflection point. And I know some of you are going to have some questions, so I'm hoping that we have some Q&A time at the end. I won't be able to stop for any questions right now, but I'm hoping to be able to answer some of these questions later. So this chart here now is a chart that we made that depicts the bear market of 2007 into 2008. And it's here for a very specific reason. One is I want to show you the actual moving averages and how I use them in their color coding. Two is I want to show you the position of those two moving averages. And three is I want to show you what a beautiful inflection point looks like. So bring your eyes with me over here. The green is the 200-day moving average, and the blue is the 50-day moving average. So just as I told you before that in a bullish market, the 50 is above the 200, and they're both sloping up, just the opposite is true for a bear market. The 50 is below the 200-day moving average, and when it starts to increase in velocity, as you can see the slope going down, so does the price begin to deteriorate even further. This right here is the inflection point. Some of you might know this expression called the death cross. That is when the 50-day moving average clears and intersects below the 200-day moving average, hence telling you that there is a phase change for the worst. Now, in this case, remember the third thing I told you was price. So even if you missed the first couple of times here, or you caught a little bit of short, got stopped out when it crossed back over, when it finally came back the third time, and those people who are more active traders could do that, get in and get out around the phase change. But even if you actually got in and waited for the death cross, which is probably what I would have waited anticipating that happening, if you got short here, just look, even if you're a long-term trend trader and you use that 200-day moving average, not only did you have basically zero risk, but you had a tremendous amount of reward till you finally peaked out here in March of 2009. And then you can see what happened with the 50. A couple of fake outs, that will happen, but essentially what you start to see is now the slope neutralizes. It starts to turn up a little bit, telling you, maybe this move is actually over to the downside. Maybe we're actually going into what we call the recovery phase. Now this is where the S&P 500 is right now. So you can see that exactly what I've been telling you. This is a 50-day moving average that has just had tremendous momentum and slope to the upside. You can see where it started to neutralize here and it broke, but then it came back through, strong slope, neutralized, slope down, we broke down, we went into the warning phase, back, and look where we are now. Totally sloped up, saying that even when we're getting these 120-point drops in a day and then it comes right back, essentially we're doing this, these gyrations are still in a bull market, which means that you should be able to buy the dips when they happen. I wouldn't necessarily say in the S&P. Actually, at this point, as I told you before, you're a little far from your 50-day moving average and you run the risk of that correction. But this has been an absolutely textbook, beautiful, your grandchildren are going to be talking about this type of bull market that we've been in. And here's the 4 indices that we have right now, pictures of them all so you can see. Because one of the most startling things that we have in the market this year has been divergence. Not only divergence in different sectors and groups. I happen to be a huge student of macro trends. I look at the indices, of course, but I look at all the sectors and groups. By the way, I will tell you that if you don't already receive my daily blog, you may want to sign up for that. We'll talk about that more at the end of where you get it. But I do a top-down sector, group and sector, macro picture approach that I offer every night to people free of charge, just as a way for you to see what I'm thinking, what I'm writing, and talk about phases. But you can see here, if we move over to NASDAQ, that has had some really bad corrections. You know, the one we had in April where it looked like people that were predicting for the end was near coming to fruition. Had you been long on catching this move, you would have just gotten out right here. And you can see, somebody asked me about the cyan line. I do layer in a 10-day moving average. That is my fast moving average. So just to repeat, this is my 200 down here. This is my 50 up here, the blue. And then this is my fast-moving average. I'm not going to spend a lot of time talking with you tonight about the fast-moving average, the 10, but I will say that it's another layer that I rely on. Kind of gives me a heads up that maybe we're going to be getting this sort of correction. If I've caught a nice move up and it starts to break around the 10, that might give me a clue that it's time to take a profit. This is just more information, but for now what I really want to show you is just how different the spider has looked from the NASDAQ, from the Russells. I write a lot about the small caps, which had a real big struggle up until recently. Talk about a phase change. Once this broke the 200, came back, then crossed over the 50, it gave you an opportunity to keep an eye on it. And once we saw it test this 200-day moving average, not once, not twice, but 3 times, and then had this big move up, guess what? Here was your entry with a low risk. And it's still sort of in play. So that is how interesting knowing the phases can be, number one, and how much money can save you, and not number two, but also understanding how we can see market divergence totally different than what we saw in 2013, where you could throw a dart and it was going to go up and everybody looked like a genius. This is really where you start to see the separation between the experienced and the inexperienced. So I'm showing you this quote for a reason because, again, as I mentioned to you, my passion is teaching, my passion is to help people, and my passion is trading. And what I really love is when I start to see some of my students who have relied on other people. I do not like to tell anybody to rely on anybody for anything when it comes to trading. You might follow somebody that's hot, but if you don't understand their technique when they go cold, you could not only lose everything, you may not even understand why it happened. And that's exactly, this is a quote from a doctor. He's a cardiologist. He's been with me for a long time. I do have a service that people, I follow my recommendations in my portfolio. And he writes that he has actually taken over his IRA from his financial advisor because using the 6 or 7 asset classes that I talk about all the time, along with the equity picks, he found he was doing better than his actual advisor. So he took over the money, and he's been doing really well, and he bases a lot of his information on the phases that I'm showing you tonight. Excuse me. So what I would like to do is give you some real trades. Now, I've taken a lot of the information out of the charts. There's no volume, RSIs, or anything like that, so that you can see just the pure logic of how simple moving averages can be, how powerful they can be. IYR is an ETF. It's the real estate ETF. And in this particular index, excuse me, I should say ETF or sector, I've been following this for a while because I think this is a really good predictor of the economy, and I could see that things were changing back in 2013. But as we came into 2014, after a correction that we had here at the end of the year, look what happened. It held. And so what it's showing here that this is actually not the right entry. I entered at 68.30. Oh, okay, it is the right entry. So we entered at 68.30. We put the risk in against the 50-day moving average. You can see that I never got stopped out because it never closed beneath the 50-day moving average, so we showed some patience with this. So at 68.30, at that point, the moving average was in at around 67.50, so about 70 cents is all that I was risking. Those of you who might be familiar with average true range, that came to about 1.5 to 2 times the average true range of this particular instrument, stayed with it, and then voila, it wound up going. I could see the momentum was going up. I could see the slope on the 50 was getting stronger. I was following the 10, and I finally exited on this day with a gain of 5.1%. And the reason why I'm showing you this is because I timed this all based on the 50. Could I have been a little tighter with my timing on this one? Yes, but I thought that if I got in here and I missed it, as long as I knew what my risk was down to here, I didn't want to be caught with this thing taking off as we came into April. But again, even if I would have gotten out, I would have gotten back in once I saw it held the 50, and then I would have caught this move. Now again, I like the ETFs. As a former commodities trader, I no longer trade futures. I trade strictly the ETFs of futures. So I use the USO for oil, I use the GLD for gold, I use the CORN for corn, SGG for sugar, et cetera, et cetera, et cetera. And for Forex, I will use the ETFs as well. I may look at the FXE or the UUP, depending on what currency I'm interested in. So I do want to say that this applies to no matter what it is that you are trading. So this is a very simple principle, and anybody can use it no matter what it is they're trading. So let's take a look at USO. Remember I mentioned to you that I like those in-between phases. So I watched this go down in the beginning of the year, and then I saw that it had this big move back over the 50. In this case, I was actually a little patient. I waited, and then after I saw, gee, this thing is going to get ready to go, I bought it when it gapped up above this bar right here, knowing once again that I had a good tight risk, paying $34.95 with the moving average at about $34.50, literally about a 45-cent risk. This chart is made larger for you to see, so the distance looks much greater, but really we're talking about a 45-cent risk. And again, put my stop in under here, showed some patience because I was very clear about what I was willing to risk, and then eventually this took off. And I stayed with this one even through this right here, saw this become an island top at the time, exited, and you can see it went right back down. Those of you who have been following oil know that actually right now it's trading at much higher levels, which is why I love to follow these moving averages in these phases, because you often get multiple opportunities to get in and out, minimal risk, good gain, get out, wait for it to set up again, get back in. Now this is an equity, this is Wells Fargo. This one again, sometimes the timing is so precise, it's mind-boggling. Sometimes the gratification is so quick, it's mind-boggling. But it's not really mind-boggling. This is not something we made up. This is based on years and years and years of research of how these moving averages work. Of course, I do use some short-term trading patterns, and I use opening ranges, which is something that Market Gauge is now very famous for. But even if I knew nothing, just using the blue line as the 50, the green line as the 200, with a little bit of an add there with the cyan line as the 10, you can do this as well. So I spent 2 days over the 50, and now I'm interested. I was very interested in the financial sector to begin with anyway as we came into this year. Got in on 211.14 at 45.76. Again, guess where my stop is? 50-day moving average. Never actually broke it. Tested it, but not on a closing basis. If it closed below, I probably would have been gone. But once again, at 45.76, where's my 50? Around 45.10. So risking about 75 cents, really nothing in this type of equity stock. And then I waited, got rewarded here. Why did I exit here, you might ask? Because of earnings. I never hold into earnings. There are people who are specialists in options into earnings reports, but for me, I find the safer route is to get out. Even if it gaps up the next day, you will eventually get another opportunity or just move on to the next trade. I've seen way too often where something looks fabulous into earnings only to see it totally dump the next day after it reports. Not a game that I like to play, nor a game that I want to put anybody who follows me into as well. Extremely risky. I also want to show you short. Now I'm going to show you a couple examples of short. So I like to go short, and I really like to go short on phase changes, exactly what I showed you. So in this case, the 50 is still above the 200, but it went into a warning phase. Why I liked this particular warning phase, and this is Dominion Resources, was because after going up for several days after it had already broken the 50-day moving average, it went right to the 50 and failed, and the next day it came in lower. So we got long right here on what we call an opening range high failure, which means it goes up, breaks out over the 30-minute opening range, and then comes down within that range, and I had an incredible risk to the 50-day moving average for the short. So I sold it at 69.28. I had my stop at that point over the 50, which was about 70.15. And then I covered half 3 days later when it got down to 1 ATR. I'm always a little bit more cautious on shorts than I am on longs because, as we know, shorts sometimes you can catch a really big move down, but for the most part what happens is when stocks get oversold, you get a short covering rally that can be vicious. So I usually will look for 1 to 3 times the amount of risk that I took and then get out happily or leave a tail and be ready to bolt quickly, which is exactly what I did once it actually made a peak low on this day, and then the next day I got out of the balance, but still made money on the same principle. There are other stocks that I can show you later when we go to my live chart that just continue to go down. Now I also want to show you what happens sometimes when you miss a phase change because you just weren't watching, but it came up on my screen, and I just want you to know this is International Game Technology. I came into 2014 extremely bullish in this stock only to watch the earnings and see it gap and then continue down for months until this day right here. And that got my attention. So, but even though the 50 was all the way down here and I didn't want to risk that far, let me just show you something else that I will use. See these patterns right here? I saw some of you before. I even saw one of you who calls yourself Japanese candlestick. So these are classic Japanese candlestick pattern. After you get a big move like this, and I can see it had a phase change, it went back from what was in a bearish phase, CR200, excuse me, here, and our 50 here, and see how the 50 is below the 200, see how the slope is down. 200 slope won't necessarily be as strong because it's over the course of 200, so it just moves slower. But what I saw was these 3 shooting stars, and they were also inside days. And so that got my attention. Somebody or a lot of people bought the heck out of this thing on this day, and then it just sat there. Just sat there. So the next day, knowing that I wasn't going to risk all the way down to the 50, but I was using the improved phase change for information, I felt I had a much tighter risk underneath these 3 lows. So I bought it on an opening range breakout on June 13th, a day I'll never forget because it was Friday the 13th and a full moon. It was actually a sleepy kind of day in the market. I figured I was going to have to wait and be patient with this. And then all of a sudden, this thing just busted loose, and in that same day, on a Friday, got 2 profit targets. I took some off immediately when it got to 1.5 times my risk. I took more off when it got to 3 times my risk. And actually, takeover rumors and 2 companies supposedly bidding for this company came out, and that was the reason for the big move. And after I saw it stall all this time and couldn't get through this 200, I've actually exited the trade, so I now no longer have a position. Actually got out of this yesterday. But still, a spectacular move using the information not only of this big range and volume, and of course other Japanese candles, but primarily because of its position after 6 months of finally getting back over the 50. Perigo, we're actually still in this trade. This is a biotech stock. So once again, this has been in a bear phase. You don't have much history here for me to show you, but you can see that we had a death cross back here, 50 below the 200. This was trading beneath each one of the moving averages. I would have never been looking to get short down here because, remember what I said, price to the risk, way too far. But it broke out back over the 50 and had that recovery phase. If you remember the graph I showed you before, when we go out of a bearish phase, our next phase is a recovery. This is, by the way, my favorite time to buy. If you talk and listen to people like Warren Buffett, he will tell you, without the language that I'm using, he will just tell you he likes to buy stocks that are cheap with the lowest risk. I will tell you that, being no Warren Buffett, and wanting to help people much more specifically, what cheap looks like to me is this phase change from bear to recovery. So we had an inside day here after the recovery phase. We had another inside day here. I got long on this day right here, and I paid 142.47. Where was my risk at this point? I could have used the 50. But instead, I used the 10. So those of you who asked me a little bit about that 10-day moving average, in this case, with 2 moving averages, 2 inside days, and a moving average right here, I positioned size where if it broke the 10, I would be gone. But instead, it stalled, and then this was yesterday, actually, when we made this chart. It had an explosion. Today, if you were watching, it went up even further. I took my first profit target today. I waited till I got 3 times my initial risk. Why? Because I loved the volume that I saw. I wanted to give it 1 more day, and guess what? We went from a recovery, remember the chart, to an accumulation. Somebody was buying, besides us, the heck out of this stock. And by the way, you can do options with this too. And there are plenty of people out there who report on options flow. And I did read, after I had got into it, that there was tremendous options flow in this stock. I haven't seen any news on it, but it certainly looks pretty good. Now, I wanted to show you, just to be real, a losing trade. Because a losing trade comes on the exact same principles, only it's when it doesn't work. I also wanted to show you what happens when something gaps against us. Now, you saw that I've gotten some incredible percentage of profit. The name of this game is not to never lose, but to make sure when you ride the trend. What I'm startled at still is how many people will ride losses forever. But as soon as they have a little bit of profit, they feel like, oh my God, I can't believe it, I'm making money. And they get out, and they miss the bulk of the move. And they don't get back in because they feel like they're chasing. Everything I do is exactly the opposite. I get out quick when I'm wrong, and if I see the momentum is in my favor, I keep going and going and going with the trade until I can see the end is near, either because it's going to report, or because it's breaking a fast-moving average, or because my trailing profitable stop has been hit on the tail that I have left. So, same principle. I see Las Vegas Sands breaking the 50. Probably I should have waited for a second day because I like to see 2 days of something confirmed. But I was pretty sure coming off the 200 with volume and everything else and this big move here and it wasn't overbought, that this thing was going to keep going and that I had a good risk to underneath the low of this day of when I got in. So I paid $77.30. Guess what happens? I get up in the middle of the night to check my equity. Yes, unfortunately, I still do that. Get up in the middle of the night. That's just the nature of being a trader. And I see it has gapped way lower during the night. And I read that China decided to have a stop smoking ban in casinos. And that this was going to affect Las Vegas Sands stock bottom line by probably about 15 to 25%. So there you go. So what do? Do I wait and hope that it comes back up? No. I take my hit, I'm gone, that's the end of it. And you can see, even though it looked like it was going to come back, I didn't get back in. I wasn't going to get back in until it got back over the 50. I watched it go down. I could have gotten back in around the 200, but really the only day to get back in actually was today, when it gapped up back over the 50, or waiting for a second day confirmation, because guess what? Now we're back not only in a bullish phase here, I said recovery before, but I meant bullish, and you also have 3 moving averages about to converge. So you don't want to get in up here. Why? Your risk is too great. You don't want to get into a situation like I got into where your risk is great, and then when it gaps against you, you lose way, way more than you wanted to. But if you can stay around these levels and confirm, you may have a nice trade here in Las Vegas Sands going forward. I'm going to show you another trade later on, by the way, a couple of other trades. Now here's another stock that I am still in. And I wanted to show you this one because I used 2 different patterns. One is I used an island bottom. This is a very rare item bottom, but 2 is I also used a phase change. So this is Sprouts. And Sprouts is a company that I have been watching ever since it had its IPO, which it had one, I don't remember now if it was early part of this year or the end of last year, but it had one relatively recently. And on its IPO day, I remember stuff like this. I never trade IPOs, but I remember I have a memory for these things, that it went up 10% on its IPO day. And then, of course, it proceeded to go down, as many stocks do after their IPOs. But I watched it and watched it and watched it. And it went into a bear phase. And then finally, I happened to look at this one day, just by a lark, because there are certain stocks that I really like to watch, and every so often I'll put them up. And I noticed on this gap down, and then on this gap up, it left an island. An island means literally like an island, like Manhattan. There's water on both sides. So you have the gap down and the gap up, and you have space in between. Only what made this island incredible was how long it was in the making. This took many, 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 many days to form the island bottom. So I actually got long as soon as I could see that it was starting to clear the 50-day moving average. I didn't wait for the confirmation on this day. I got in at 30.74. Then happily, I could have actually added once we had the confirmation of the recovery phase. So again, you see that recovery phase that I love so much. Never really broke down again. At this point now, I was trading it for the island and for the recovery phase. And then we've had this big move up, and I'm holding on to this one for a while, looking for my first profit target coming up soon. But already I have more than 2 times my initial risk on this particular stock. Again, all phases. So what I'm going to do now is I'm going to turn this over to Jeff Bish, who is my partner and also the president of Market Gauge. He's going to talk to you for a bit. I'm going to come back with some live charts. I'm going to give you a couple of trades, and I will be able to answer any questions that you might have.
And can everybody hear me? Because I've got to switch screens here, and I actually have a question for you. I was just cracking up a few minutes ago because Mish made a comment, and she was making a comment about an island. So can you all just tell me, when you think of an island, what island do you think of? Like, what comes to your mind when you think island? And I'm not talking about stocks. I'm talking about the physical island. Because I'm just curious if anyone has the same idea of what an island is as Gilligan's. All right, Aruba, Hawaii, Cape Cod, Corfu. Mish says Manhattan. I mean, half the people out there don't even know Manhattan is an island. I mean, talk about a New Yorker. So I happen to be sitting right next to her. So I found that rather entertaining. And so I wanted to see if anybody else. My first thought was Hawaii, and you all came up with some better ones than Hawaii, in my opinion. So, all right. So we are going to do a Q&A session, and after the Q&A session, Mish is going to talk about trades that are setting up now. All right. But before we get that, I have a quick opportunity for any of you out there who would like to be able to find trades like the ones that Mish is describing here. And when I say a quick opportunity, it's quick in a lot of senses. What we're talking about here is a course that we call Fast Track to Profitable Swing Trading, because we literally put this together as a way for you to learn how to swing trade like Mish in the shortest time possible. So it's 5 modules. I've got them listed right here. Each module is a streaming video, so all you have to do is log into the website, and it streams right to you. Each module has a short introductory lesson followed by segments from videos that Mish puts together as coaching sessions for her premium member. So you've got, as I said, a short instructional and then like real-time analysis of what the markets were doing in different scenarios. So Module 1, the big picture, is all about keeping you on the right side of the market. How you look at how the overall market is trading, how you assess that, and how that affects your trades. Module 2, swing trading in any market. You saw a lot of that here in this presentation with the understanding of bullish phases, bearish phases, and more importantly, the phases in between, right? Mish wasn't able to cover all the phases. There are 6, which you saw at the beginning. She focused on the transitions in a few of them. But when you really understand all 6 phases, you're in control in any market condition. Module 3 says day trading tactics for a better swing trading. This isn't necessarily going to turn you into a day trader. You don't have to be a day trader to appreciate this segment. But what it will do for you is it will show you how to buy near the high of the day, buy near the low of the day, sell near the high of the day. It'll teach you to use some tactics to understand which days are likely to be trend days and which days maybe you should hold off, today's not the day, to get into that swing trade. Module 4 is Mish's favorite low risk entry. All right, this is her tactic for taking really tight risks against the high or the low of the day. Again, not with the attempt to be a day trader, but rather with the attempt to really minimize your risk. And whenever you can minimize your risk, it means your risk-reward ratio is going to be improved, right? And finally, what most traders are after, how can you swing trade with a limited amount of time? So Mish spends a special module on exactly that, How can you be a swing trader without being chained to the monitor all day? Now, this is normally a course that you would spend $397 for. But Steve and the Candlestick Trading Forum has been great to us and invited us to come speak here, so we put together a really special offer. We've never offered this in this way before, and it is, in fact, just $17. Now, it won't always be $17, but certainly it is right now, and all you have to do is go to www.marketgauge.com/fast. And you'll get, as soon as you register, you'll have everything you need to log into the site and be able to go through all 5 modules. I don't know the exact duration of the whole course, but I'll bet it's probably in the area of about an hour and a half to 2 hours. So it really is something that gives you a broad spectrum of information, like I just said, everything from understanding how to analyze the market right down to how to use day trading tactics to reduce your risk. And it combines both kind of structured lessons as well as real analysis that Mish was giving her premium members at the time, at various times in various market conditions. So rather than $397 today, you can get it for only $17. So I encourage you to click on the link that is in the text section right now, or simply go to www.marketgauge.com. There's more detailed descriptions of each one of those segments, each one of the modules on that page. So feel free to do that while we are going over the questions that you might have. So let's take some questions, and then, as I said, after the questions, we will then come back to setups. Mish will go to live charts, and we'll come back to the setups that are setting up now. All right. So.
Okay. Hi. Hi, everyone. I want you to know I wolfed down a slice of pizza while I was on that break. And now I have some brain food, New York brain food. Okay, so how do you want to do the questions? Should you want to read them to me?
Well,
should I just read them?
You know, normally I help you look through them, but the questions aren't showing up, and maybe Becky can do that for my screen. I can see you're coming up on your screen, but they're not coming up on my screen.
Well, let me ask you guys a question since I am new to this format. Do you all see each other's questions, or do I need to read them to you and then repeat and then give you my answer? Okay, you see them. Oh, that's great. Okay, thank you, Chris. All right, so as you're scrolling up, I may have missed a few questions. So if you have another question, give it to me now because I may have missed them already. So,
oh, Mish, can I interrupt for a second? Sure. It's probably a good idea to read them anyway because for the recording, I don't think they're going to see the questions. Maybe Jim, you could confirm that, but a lot of times the recording won't show the text.
Good point. Okay, so one question I'm getting here is any scans for Think or Swim? I'm assuming that's what you mean by TRS. I'm not quite, I mean, I do use scans, but I'm not quite sure what you mean by scans. Are you familiar with our software to know that we actually have scanning tools? So we'll come back to your question. How did I feel when USO hit 50? I'm not quite sure what you're asking. Oh, you mean when I hit the 50-day moving average? Let me go back and look at that chart. I'm going to look at a current chart now since I've already put that PowerPoint away. How did I feel when it hit after? Well, I was already gone, if you recall. I had gotten out on that gap lower once it broke the 10. So I didn't have any feeling about it other than I was waiting for the next opportunity to get long. USO is something that has actually given you many opportunities to buy this year. Okay, Perigo sees to break the rules vis-a-vis the 50 and the 200. Actually, not at all. Perigo was a great rule follower because remember I showed you, when you go back, I can't review with you now, but I showed you that I bought it after it got through that 50-day moving average and went from a bearish phase into a recovery phase. So I actually followed the rules. Happily, it then went into an accumulation phase. Okay, let's see. Do you scale on the way up or hold all and sell all at the same time? Excellent question. I scale on the way up. I have different profit targets that I use based on risk reward. So if I'm risking one or two times the average range, I won't take a profit until it gets to at least 1.5 to 3 times what my initial risk is. But I will take profits, and I take bits and pieces off it as the trade goes up and I start trailing the stops. So where do I think SPY is heading in the next 1 to 5 days? Well, you know what? When I show you charts, I rather look at a chart. I'm a very visual person. When I look at a chart, I'll be happy to answer that question. Okay, do certain stocks, there's my Japanese candlestick name. I just lost you. Where are you? Hold on. I'm scrolling here because your questions are coming so fast.
849.
849. What trigger do you use? Entry on crossover and or other. I'm not sure what that means. How do you determine choppy markets or range trading your system? Let's go that, and I'll come back to the other question. There's my Japanese guy. Wait, hold on. There we go.
Move this up.
I got to move this up. I see. I'm trying to figure out how.
That'll close it. Drag it up.
Just drag it up.
Next to it.
Like that?
Yeah, there you go.
Okay. I just gave myself. No, just for me. Okay, now I can see everybody. Do certain stocks behave better with your rules than others? If so, which ones? Wow, that's a challenging question.
Yeah, the ones that work.
Just saying, yeah, the ones that work, they work better. Well, there are certain stocks, but actually, to be fair, I can answer that question. Number one is there's this amount of daily average volume that I will look at with a particular instrument. I like to trade things that have probably about 500,000 or more in average volume. And then I think that they have a lot more liquidity and they work better. When you're trading things that are extremely thin, then sometimes the rules won't work because there's just nobody there on the other side. So yeah, I'd say that that's probably the simplest answer that I can think of. But of course, you always have to anticipate that things don't work. I never go into a trade thinking about how much I'm going to make. I always go into a trade thinking, what is my bottom line of how much I'm willing to lose? That is the only way to think as far as I'm concerned. Okay, what trigger do I use for entry, only crossover and or other? I use a couple of things. I use short-term trading patterns. As you saw, Corey, I showed you inside days. I am a huge fan of inside days, particularly when we get more than one. I use good old charting. Remember, I showed you my point and figure charts from back in the day. So I actually use some chart patterns, consolidation, compression, flags, etc. But I time my way in basically based on risk using our opening range theories, and we use a 2, a 5, and a 30-minute opening range. If everything lines up, along with some pivots, that's when I go in and strike. And I do all this work the night before, so I'm well prepared for what I'm watching set up the next day. Dan, how do I determine choppy markets or raid trading using this system? Well, that's the beauty of the markets, is that even if the markets are choppy, there's always something going off in its own direction. So if you know where to look for these inflection points, you can catch a very good move in no matter what. Whether the market is bearish, you can always find something that's going up. If it's bullish, you can find something that's going down. And if it's sideways and choppy, you can find something that has beautiful momentum. So that's really basically, that really comes from the experience in the eye of knowing where those inflection points come. Usually, like I said, simply just waiting for some of these 50 and 200-day moving averages to set up. It really, if you're that patient, you're going to have a tremendous successful track record. Diane, on the website, the description of the course shows 5 modules. How many of the 5 are included? All, right? All of them are included in the $17 special. Okay, do I ever day trade? Funny you should ask that question, JJ. Actually, our day trading person went on vacation for 2 weeks. I ran a swing trading and a day trading room simultaneously and actually did unbelievably well. Out of 8 out of the 9 days, we were profitable in the day trading room. I do like to day trade, but at this point in my life, I like swing trading a lot better. I want to have some patience. I want to give the trade room. I'm not necessarily going to be looking for that instant gratification, but boy, is it fun when it happens. Okay, so you said no futures, only ETFs. So when you do switch to individual underlyings like LVS or something else, when do you switch to individual? Oh, I don't only trade ETFs. I trade the ETFs for futures. I trade everything. So what I'm saying is I use equities. I look every night. I scan about 500 or 600 different equities. And I have certain parameters that I'm looking for, and I have incredible proprietary software at my disposal to make my job a lot easier. But I trade everything. So what I'm saying is I don't go into the futures market anymore. I will do it through an ETF. Not as much fun, sometimes much thinner, but it just makes my life easier, and especially when I have a lot of people who follow me, it makes their lives easier as well. Hi, can you can you refer, I guess you're saying, Gary, to other time frames than the daily time frame? I will be happy to do that when I show you some examples for my live charts. And yes, I do use other time frames. Okay, link not referable. Do you use the ATR? If so, please give example. Can we wait till I get to a live chart for that? I'm happy to do that because there you will see my ATR is actually printed on the screen. And the fact that you even know what an ATR is, I'm incredibly impressed. Okay. Do I scale in? No, I'm kind of an all-in kind of person. If I'm looking for certain points to cross as a sort of a bare bones minimum, I may buy half and then add on that half later. What I may do sometimes is go in for a full core position and then trade around that position. But for the most part, everything is so fully calculated, I'm usually all in. I'm getting a private message. Should I be looking at that?
I don't think you can
Okay,
manage
I don't think
both.
I can. Vic, if you're VCC, if you're patient, I'll come back to your private question. I can't do that right now.
Or VC, you can. This is Jeff. You can private message me.
Okay. So how would I trade Apple? Well, it's interesting. I was actually short Apple until today, and that was because I kept waiting for it to break 90, and it didn't. I got short at 92.10, and I thought Apple was really going to correct hard, but it gave me some money. I got 1.5 times my initial risk, which was good, but I now think that Apple holding 90, this is nothing to do with phases. It's in a bull phase. It's been in a bull phase. This is more to do with just knowing what daily chart points look like in pivotal numbers. 90 seems to be holding. So based on that 90, if that continues to hold, you might actually see Apple pop right back up. What is your trigger for entry? I think I answered that already, so I'm going to keep going. If you move it up, it will not scroll. Oh, you're talking about this. I seem to be looking at everything now. Is your 10-day moving average exponential or simple? That is simple. I cannot sign up for the 28. I'm sorry, I don't know. That's going to, Jeff will have to look at that. How much is your service with Twitter? You know what? Why don't you email me at mish@marketgauge.com, and I will make sure that that question gets answered. It says resources not available, Jeff. There's some people are having some problems. What time of day do you enter a trade? Another good question. Boy, you guys have got great questions. Depends. I mean, do you know statistically most equities, most instruments make their move in the first 30 minutes. They make their entire range in the first 30 minutes. So typically, not always, if something breaks out of the 30-minute range or breaks down from its 30-minute range, that's going to give you an edge to know that it's going to make a bigger move than just what it did in the first 30 minutes. Sometimes I will use a 5-minute.
I just want to interrupt this for a commercial interruption. I'm going to check out the site. I got a bunch of you have private messaged me suggesting that there might be a website issue. I'm going to check it out, and I'll be right back with you. I just don't want you all to think that I'm ignoring you. But when I opened up the private message me floodgates, I'm flooded. So I'll get back to you all as a group as Mish continues. So you just continue, Mish. I just wanted people to know I wasn't ignoring them.
So getting back to your question about time of day, so very typically it'll be within the first 5 minutes. If not, it'll be somewhere between the first 30 to an hour. But this market lately has been really kind of busy all day long. So I may wait patiently for something to set up. We do something called a reversal trade where it breaks down and then comes right back through. That can happen in the middle of the day. So yeah, I mean, I'll try to get most of my trades done early so that many people who follow me don't sit there in front of their screen all day, can go and do whatever it is they're going to do that day, and they know they're already positioned, but there are exceptions. The scans in the modules. I still not 100. When you're saying scans, do you mean, are you seeing I'm not sure what it is you're asking me, really. I have to tell you, Chris, if you're talking about our hot scans and that kind of stuff, no, those aren't in the modules. If you're talking about these moving averages and volumes and RSIs and pivots and things like that, yeah, that's actually in the modules. Okay, what tells you a stock has momentum? Few things. One would obviously be volume. Two would be price patterns. Three would be the slopes of the moving averages, that kind of thing. I use all three things all together. What percent do you put your stop under the 50 DMA? Well, it's really more from the entry that regards it, but that's a very good question. I'll usually use anywhere between 3 and 6% of the range of that particular instrument to determine my stop. So if the 50s, let's say, is lined up at 100, and the stock has a range of about $1, I might put it 6 cents under the 100, and I'll use a time confirm on that. I try to give it a little bit of room, but not too much room. Is the Fast Track software a one-time charge? No, that's a one-time charge. That's no monthly fee follows that whatsoever. Detecting momentum, experience, feel, anything tangible? I think volume is going to be your best bet. I am a real student of volume. I can do a whole course just on volume. I look at volume in ways that a lot of other traders don't. Really, it's not necessarily that it has to have big volume. It's volume relative to the volume of that particular instrument on any given day. Accumulation, distribution, that kind of thing. I'd say volume is probably your number one thing. Feel really comes from just seeing something that's been compressing and breaks out. So I would say that's simple physics thing. This is recorded, right? This is being recorded, Jeff. So yes, you'll be So why don't I trade futures anymore? Just because I'm already watching too much. And the ETFs have made it really easy, and because I have over 600 people who pay me, and most of them do not have the ability to trade futures, so I've just decided that something to compromise on would be to use these ETFs, and I find them to be fine. I'm very happy with them. You talked about option flow. Where do you find the option flow? There's a couple of guys that I follow on Twitter that are actually pretty amazingly generous with giving you that information. One guy that comes off to the top of my head is called Wall Street Jesus. I don't necessarily love that name, his Twitter handle, but he's very generous with giving you the updates throughout the day on where option flow is coming in. But there are definitely scans and things I don't have in front of me, but there are scans and things that show that when the big option flow comes in. Okay, so there's the link that's been posted again. Let me scroll down here for more questions. I paid, but I can't access. Jeff is working on that. What are the merits of calculating? What are the merits of calculating what exactly? Come back to me with what you're trying to ask me. Yeah, we're getting to the modules, so please just be patient with us. Do I use trailing stops? Absolutely, absolutely. I always I have parameters of when I go to a break-even stop after the initial risk, and then I have parameters of when I start to trail the stop up. Can you be slowly a little bit when you explain the open range, what time chart you use? Well, I don't really have time. I mean, again, open range is it's a simple but complicated thing, but essentially we use a 30-minute. So I use a 30-minute chart, but I do it in 1-minute bars. I do have a 30-minute bar chart too, which I will show you when I look at our different time frames. Okay, a lot of you have had trouble accessing.
I think it might be working now. I did reset something, but I haven't actually gotten there to figure it out.
Okay, so Jeff's working on it. He thinks it might be working. So check it out. Okay, I'm getting that question about the 10-day. Yeah, it's simple. Okay, pay, can access. Yes, yes, yes. We're working on that. When I click on the modules, yeah. Okay, Can we access your big picture daily updates on an ongoing basis? You can access that for free. Just go to mish.marketgauge.com and sign up for Mish's Daily. I also put it on Twitter every night. That's free. That has nothing to do with the $17 deal. What are the merits of calculating ATR? See, now I understand your question, Harry. Thank you for clarifying. Because what the average true range of any instrument tells you is the personality of that particular instrument or the volatility of that particular instrument. This is the short answer. So that means Apple, let's say, well, actually now that it's split, bad example. So let me come up with another one. Google, that may have a $5 range per day versus something like, I don't know, let me think of something really small. Intel. Well, Intel actually got a bigger range.
Yes.
But when it first got going, Intel had like a 35-cent ATR. The difference, of course, is going to determine how much you buy, because you're basing your risk on the size of the range. But obviously, you're going to buy a whole lot less of Google than you would of Intel when you're ready to go long, even if your dollar risk is exactly the same. Do you size trade based on risk or equal asset allocation? Yes, all of that we have computerized, by the way, tells us how much to risk, how short, long we should be, and how we should be diversified across all asset allocations. Again, way too much to get into right now. Are you supposed to be seeing our charts? I haven't actually switched back to my screen yet, so I'm so busy reading your questions I haven't had a chance to do that, but we will in a moment. Yes, Forex definitely works with Forex, a slope equivalent to momentum in your analysis. I would say not equivalent, but definitely related. Okay, because momentum can happen without the slope of the moving averages. However, the slope is based on a momentum feature, as in the velocity is increasing. Jeff, this is the message I got. Okay, Jeff, you can see that. Do you use pivot points? Yes, I love pivot points. Steve is there now trying to help you with all of your questions about the link, and I'm so sorry about that. 50 is also a simple moving average. Yes. Mish, as a chartist, how do you manage volatility on negative economic indicators trailing stops? Well, that is exactly where it comes in, with understanding what your risk is going in, position sizing accordingly. And of course, as I showed you with the LVS, sometimes you get caught. It happens very rarely to me, though. That just happened to be a bizarre bad news type of thing that came out. So I manage my volatility by understanding what these inflection points are using the moving averages, understanding what my risk is using the average true range, and then position sizing on what I consider to be a good dollar amount to risk on anything. So I will never, ever on any particular instrument get killed. It just can't happen. It just won't happen. And first of all, I'm just trading too many things, and secondly, because I factor all of that in.
Okay, so I'm getting some feedback. This is Jeff. I'm getting feedback from the private messages. Again, I really apologize. Imagine that you had like 40 private messages all blinking, and you got to. So I can't see them, but I do have some people who I have seen who are saying they are able to get in now, which would make sense because I reset it. If you did buy and you are a member, the easiest way to get in, I'm putting the link in right now, is to go to marketgauge.com, and you'll see a link on our main menu over on the right called My Market Gauge. That'll take you to this place called My Account. And if you log in there, you will then see everything you're entitled to if you bought anything else from us before. If this is your first thing, then you'll see Fast Track there. So my recommendation, this is true whenever you buy anything from our site, or even if you get the free stuff, go to My Market Gauge. Everything you're entitled to will be there. If you happen to be someone who is a prior user of Market Gauge and you were already logged in before you went to buy this, you might have to log out and then log back in. But I did confirm by looking at some of the people who had purchased that the permissions are being set. So it sounded like there was a hiccup with the website. I reset the website. So I do believe that it's working now. If it's not working for you now, I guess, private message me, but I'm going to close all the private messages right now so any new ones will get my attention. I really apologize for the hiccup in the website. I knew it was a good deal. I didn't know it was going to crash the website. With that, Mish, I'll let you go. And why don't you start projecting?
Okay, let me start projecting. And by the way, I posted the mish.marketgauge.com. That's where you can sign up for Mish's Daily, my free blog. You can also take a look at our portfolio. It doesn't show you open positions, but it shows you closed positions. So you can just take a look. We've had, a pretty fantastic track record. We're up over 8% already in 2014 with open positions close to 10%. So all of that, some articles I've written, all of that is on my subset of the Market Gauge site, the mish.marketgauge.site. And I'm also going to put in my Twitter for you so that if you want to follow me on Twitter, you may do so. That is @MarketMinute. Okay. Thanks, Trade Chick. Oh, wow. Oh, by the way, somebody there called Lakota Eagle. Are you from the Lakota tribe? Because we live in New Mexico, and we went all throughout Montana and last year, and so I was just curious. You don't have to answer that question. I just thought it was an interesting name that you have. Okay, so yes, average true range is based on open, high-low, open, high-low, close type of thing. All right, let me take a second here. I'm so happy that you guys are asking me all these questions, but I'd like to actually show you my screen again. So, can you see? You should. Yes, you do see. I can see that you can see, so that's good. All right, so I only remember one particular chart that somebody wanted me to look at that I just saw recently, which is CRM. Okay, this is Salesforce.com. Do you know, by the way, that Salesforce.com happens to be the biggest employer in California? I just read that recently. But anyway, this is a very interesting situation because look what you had here. You had a death cross, and you went into a bear phase, then you went back into a recovery phase, and immediately you went back into an accumulation phase. So the person who asked me, have we changed phases, you learned something today. That's great. Yes, absolutely we have. So the question you have to ask yourself now is, based on this sort of basing action that it had here, and how the distance from where it is from the 200-day moving average, do you have a decent risk? So let's talk about that average true range I was telling you about. Now, I don't have that ability to give you my pen feature. I know there's a way to do this on here, but I'm not going to take the time to do it. So I'll just circle where I'm looking. $1.56 is the average true range of CRM. So I would say that based on that, I like to look at 1 to 1.5 of the range for my risk, which means I'd be willing to look at risking about max $2, maybe 2.5 if I really wanted to stretch it. So based on the current pricing and where it is now, you are in line with risk. However, you can see it came off here today and it's sitting on that 10-day moving average. And may, especially as we're going into a holiday week, give it a little bit more time to see if I can get even tighter to that 200-day moving average before going in. So, but yeah, that looks interesting. It definitely looks interesting. And by the way, now you can see some of the other stuff I use. So here's my volume average that I can spread out a little bit. Here is my RSI. I use a Bollinger RSI. As you can see here, there's my average true range that I have also customized for the charts. Okay, oh boy, people are throwing, you wanted me to show you Tesla, huh? Okay, Tesla. But I want to make sure I leave a second here to show you what I had actually prepared for you today. Okay, so here's Tesla. Tesla, oh my God, this actually gave you such a gift when it touched down on that 200-day moving average and started to come back within this range, then cleared the 50, sat around the 50, had an inside day right on the 50, and then whammo this day. So I would say if you were going to be in Tesla, you should be in it right here for your greatest risk, or I should say your least risk. Now here we are consolidating in a new range, so your next question would be, is this worthwhile for what type of time frame? Would I be doing this for a swing trade with a risk all the way down here? No. Would I do this maybe for a day trade? Yeah, I would certainly consider it. For a mini swing trade where basically I might risk about half of its average true range, look at this one has a $9 range, that's also a possibility. And since the question came on whether or not I look at other time frames, I do. This is my weekly chart. You can see I have a Bollinger Band coming in, which could serve as some resistance, but I'm not too worried about that at this point. Here's my monthly chart, and Tesla doesn't have that much monthly information. Here's the daily we just looked at, and here's my 30-minute with all my pivot points and my 10-day moving average shown here on the screen. In a 30-minute chart, you can see that Tesla today looked like it was going to take out the 30-minute and then didn't. So it was never a buy opportunity today unless you looked at a reversal. And I don't want to get too advanced because I'm going to confuse you. I want you to just keep it real simple here with the 50 and with the 200 and the 10. Okay, I think I talked a little bit about LVS before when I showed you how I lost money. Well, it's actually almost trading exactly where I originally got in. And you can see with LVS, we are now confirming that we're moved above both moving averages. So the question you have to ask yourself is, what's my risk? I think that's pretty clear. It's really to these moving averages. The second thing is after it's made its move today and then closed sort of right here in the middle, I would definitely want to see what happens tomorrow before I just jumped in. I may want this to digest a day or two unless you think this thing is going to fly. So again, it's very hard for me to just globally answer that question. Are you a day trade? Looking for that? Are you looking for a swing trade? Or are you looking for the sort of in between, the mini swing trade? And if you're looking for a swing trade, I probably, if it opens up in the range of today and I see a good risk, it has a $1.47 range of somewhere about an ATR, maybe a little bit more, perhaps I would try it. Again, remember now, we're getting into a holiday week, so I wouldn't expect that much to be happening on a Friday and into next week. Okay, so GILD. Well, you know, before we do that, can I show you the two trades that I wanted to show you, one long and one short? These are actually on my list for my subscribers going into tomorrow. So I did that, that's what I wanted to share with you. One is not set up yet, but something I want you to keep an eye on. Now, if you read my blog tonight, you'll see that I've been talking the last couple of nights about KRE, which is the regional bank ETF. And even though the financials have already made the move, the XLF ETF and a lot of the bank stocks, the actual regional banks have not really caught up yet. And so one of the better performers in that particular group is this one, which is State Street. And State Street, as you can see, went into a bearish phase. Even after the death cross, it kind of took out the 200 and then failed. You had a nice short here, chopped around, and then in a bull market, by the way, I don't necessarily look to get too heavily short. I'll look for certain things, but not necessarily. I'll never have more than maybe one, max maybe two short trades on when we're in a strong bull market like we've been in. But in this case now, I'm more interested in this as it's gotten to the recovery phase, and look at the position where it's at right now. It's very close to the 200. So my instructions, I'll read it to you right from my sheet, is over the 200 DMA or 68.29 gets interesting. Okay, do I think this could happen tomorrow? Maybe not. Am I looking for the possibility of this happening over the next few days? Well, it depends. Holiday week, it may not happen until we come back. But when it does, then I would say you would have to wait maybe a day or two to see if it confirms. You go in, you put your risk here, and you are in what I believe is a group. show you the ETF here for a second, that could be very ready to be taking off after basing over the last several months here. And we talked about slope. Look what's happening here to the 50. The price is not that far. The 50 is starting to point up. So it does look like, especially yesterday, which this thing went down and then came right back up, I thought that showed good promise. If we look at the volume here, you can see yesterday we had decent volume, not crazy volume, but decent volume. Now, of course, today lighter volume. I would think volume is going to continue to be a factor over the next several days. But as this consolidates and holds, you can either get involved in the ETF itself or look at State Street and get in at an inflection point over the 200-day moving average. So that was one. I actually had another one, though, that was already in process because I love this chart. I love this chart. This is OI. This is Owens, Illinois. I actually have some people in from 33.50. I say some people because I have two different services. My longer-term swing trading service called Advantage bought it in here and had a risk to under here because it was well within the parameters. Now, I still think this is setting up well. And why? If we scrunch that up, we have a beautiful sort of inverted head and shoulders pattern. Looks like the neckline just started to break out of it today. If that's the case, we could see another good $3 move out of this, which would put this up about 37.38. I would use as a risk, because we're too far now, I would use as a risk more of the fast-moving averages, where you can see it corresponds with these chart highs here. This high from here, which looks like it's just a little bit over 34. I think that's like 34.15. So maybe you would be looking to buy it tomorrow. Risk to about 34.15, thinking that maybe we can get to about 37 on that. I really like this chart a lot for the longer term. I'm very, very bullish on this actually for the longer term based on the weekly chart pattern, which also has a nice double bottom here, and on the monthly chart pattern, which cleared a very significant monthly moving average, has been consolidating throughout 2014 and looks like it's ready to move. This is a stock back in 2008 was trading up at 60, so it definitely has potential. So those are the couple of longs. I've given you a lot to look at on the long side. Let me give you one on the short side. I actually did get short Walmart today, but now I think that's kind of in play. This is Express Scripts, and you can see what happened here. This broke down under the, see what I'll do sometimes is I may miss these moves. You know, obviously I can't see everything when it's happening at once, but it'll come up eventually on my radar from some other pattern, like in this case, an inside day, and then I'll take a look and I'll see it broke all the moving averages. It's actually come back, and look at that. This is so beautiful. I get excited when I see these things. You can see how the 50 is so close to the 200 and it looks like the 50 is about to cross down into one of those death crosses. You can see the slope on the 50 is starting to move down even though the 200 hasn't yet, as remember it's very slow, 200 days. But you can see the 10 being the fastest one is now accelerating to the downside. What excites me the most about these converging moving averages in this phase change is that this came back really close to the moving averages, so you have an incredibly tight risk to go short now. Essentially, if it gets back over here, you're gone. So if you risk to about 69, whatever that price is, 69, hold on, let me tell you here, about 69.70, and you were able to get in around 69, look at the ATR on this is 91 cents. You wouldn't even be risking a full ATR. So you can position size accordingly, or you can even give yourself a little bit more room and risk to a full ATR or a little bit more, a 1.5 ATR. So that's your short. OI, already set up for a long. STT, eyes on for a long if it breaks the 200, because something like this could happen. BVH was something I've been watching. It finally took it out, had a great move, and now it's consolidating. This, too, is still giving you time if it holds this 200-day moving average. This is BZ Homes.
I'm going to interrupt for one second again. I just want to let everybody know. First of all, thank you for everybody who's been so complimentive about getting the site back and going. I have found a couple of people who weren't permissioned properly. They got halfway through, and probably due to the website hiccups. So if you can't log in at the My Market Gauge area, just give me a private message. But I can tell you that everybody's getting in now that the site's back up and going. So I'm going to put the link to get back in or to get registered, again, marketgauge.com/fast. And again, thank you everyone for your patience, and thank you for the compliments, both on the webinar so far and what you've been able to see in the Fast Track issue, or the Fast Track course. All right?
And I've missed a lot of your recent questions, because once I start focusing on charts, it's hard for me to look back at the questions. I get sucked in, so to speak, to the chart, and I start to read everything that it's telling me. And that's exactly what you're hearing, is my sort of stream of consciousness as I look at these charts. Now, I just have a question here for Steve. Is there a cutoff point on these? Should I keep going with questions? Since I'm a guest of yours, I want to make sure that I respect your sort of house rules. Steve? Okay, I'll keep going until I get an answer from Steve.
The other thing is I will make sure that everybody who registers for the Fast Track product will get onto Mish's Daily. I think you will anyway, but I'll double check that that's set up. And the place to get Mish's Daily, I'll put that link in here also. And while I'm just kind of giving you guys all the rundown, keep your eyes on your email from us, because Mish has got a huge thing planned for the week after 4th of July. So if you liked this webinar, you're going to really like what's coming. So this gives you a great opportunity to get going with Fast Track. We'll make sure that you've got the daily, Mish's Daily it's called, which is that daily blog. I'll put the link in. I want to see if I can find a link that takes you directly there. You know, mish.marketgauge.com will do it, and we'll get you all set up.
Yeah, okay, so I'll keep going, because as Jim just pointed out, there are still now declining 445 people in the room. So I guess you're hungry, so I'm happy to feed you while I'm still standing, yes.
Mish, keep going as long as you want to keep talking.
Oh, that's a very dangerous thing to say to a woman. Okay. All right, I'll keep talking. Sure. All right, I'm starting to miss some questions here. Yeah, ATR, 14 periods is standard. I use a 10-day period, by the way, Michael, just so you know. That's just what we use. Consistency what is important in that situation. Whatever you do, whether you do exactly what I do or you do something different, just my advice is do it consistently. Because when you start messing around and changing things up, and one day you do one thing, one day you do another, that's when you get really screwed up. Okay, so I'm getting some more requests for charts. That's really what I do best. So let me do that. Okay, Twitter. You know, I'm actually in the process of working on what I consider to be a new and exciting pattern that I have been noticing a lot lately. Now, you'll see I have no moving averages in here. I think this is just, for some reason, this chart is not showing it, and I don't really know why. I've had problems with this Twitter chart for some reason. But I could tell you that right now, we have a 10-day moving average. We do not have a 200-day moving average. I don't even think that Twitter's been around that long yet. We probably have a 50-day moving average, and I'm not sure why I'm not seeing it. But I will also tell you that what I have found that's really exciting. Before, remember I showed you the chart on sprouts, SFM, the island bottom? Well, not everything has to have a sexy island bottom like that, but what I have noticed is that when you get a big gap down like we did here, and then we've spent all this time working a bottom, and then that gap gets filled, even if you wait till that time to get in, and you can see it peeked its head out on this day right here. And let me actually give you a view data window here so we can see All right, so this is my data window so we can see prices. It peeked its head out on this day right here at 34.55, right at the end of the day. And then the next day when it followed through, oh, I'm sorry, I'm looking at the wrong spot. Right here, it peeked its head out on, I'm sorry, I'm getting tired. 38.17 was the high that day, and it closed just near it. It peeked its head through that gap, and then the next day had follow through. I find that when something fills a gap like that and then holds that gap and gives you a good risk against that gap, it often gives you a really good trade. Now, you had good volume in here, so somebody else is buying Twitter, and I know that there's been some option activity in this. So now the question is, I don't really have that great risk anymore. Again, it's all going to get back to what type of time frame. Would I be doing a buy and hold on Twitter? Not at this point. You missed the boat. But would I day trade this? Absolutely. Do I think it's getting a little long in the tooth on the RSI? Not there yet, so you're still okay. Just watch your risk. It's always going to be, thank you, it's always going to be about your risk. All right, let's see what else. Facebook. Oh, everybody wants social media. Okay. All right, so Facebook, again, look at that beautiful opportunity you had. This is why, guys, if you learn nothing else, just learn. Wait for these moving averages. If you're already extended, don't get in. You missed it. Don't be like a kid in a candy store. I knew it was going up. I knew it was going up. Because it doesn't matter what it did in hindsight. It only matters how much you're willing to risk when you get in, right? That is the whole game. That's what's going to keep you alive for a long, long time. Trading for a long, long time. And so of course I go, oh, darn it, I missed Facebook when it broke out. I knew I should have bought it that day. I'm not completely immune to being a human being, but I am smart enough and experienced enough to know that if I miss the inflection point, if I can't get in within the next couple of days or darn close, move on. And that is exactly what I'm telling you about Facebook. In fact, I find today's action somewhat disturbing against the resistance. After this nice big move, it actually underperformed the market. I might wait for it to correct, maybe down to the 10, but I wouldn't necessarily be chasing this one right here. Oh my goodness. Okay, so let's see what else we got here. I saw Facebook, SCTOI. Oh yeah, that was my recommendations. Thanks. Twitter, GMCR. Oh, can I tell you a story about GMCR?
She's not even drinking caffeine.
You said keep talking, didn't you? Okay. Okay, so I told you be careful what you ask me for here. You know, it's so funny because I'm not in GMCR right now, but I was on the base. You know what? Let me get rid of these trend lines. They're just going to confuse you. This was a trend line I was using, by the way, but I'm no longer using it because it's old. But anyway, I actually had seen this gap, and remember, I love gaps. I love gaps as much as island bottoms, gaps, gap ups, gap downs. I don't like to see gaps filled when they're going up because it means that it's taken a lot of wind out of the sail. I do like to see gaps filled when things are going down, back up to the upside, as I just showed you with Twitter. So when I saw that this had gapped, I saw all these days of compression. And, of course, I missed this move. I don't know if that was on earnings or what. I'm assuming it was. So I got in right here. Actually, it was right here. Once it cleared that 10-day moving average. This is a real trade, folks. This is a real story. And I put my stop underneath all this compression right here. And I waited. This was June 1st. Actually, I remember the day. And then on Friday, boy, sometimes I get so lucky on Fridays. Everybody's in, all my folks are in, we're watching it, and after it closed this day, I was like, oh darn, we're going to get stopped out. Look at that close. It can't close, can't clear the 10-day. But this is where discipline and knowing that once you have your initial risk in, stick to your plan, paid off. I actually even tweeted to my subscribers, Lord of the Markets, please make GMCR do something. This is a true story. And then came that Friday, sitting around. All of a sudden, I see options flow comes into this particular stock. The thing flies. Guess what? 1.5, 3 times my initial risk gets reached in one day. We actually exited the trade because I was like, Friday, gift horse, get out, that's it. Now you can see you had a couple of opportunities to get in. And so the inside day pattern against the 10, what have you. But right now, I think GMCR is misbehaving. I wouldn't want to be getting in right in. I don't have a reference point to work off of. You can see that the consolidation that we had for these last several days actually broke down today. So I'm not really sure what's going on with it, but this was not a good performance. All right, keep going, keep going, keep going. Let's see what else we got here. Oh, man. Okay, JBL, because I think you've asked me twice now, so let's go to JBL. Some of these charts I haven't looked at, so you're going to get a fresh read. Well, what's the first thing you see about this one? Is this a I missed the boat kind of trade? Yeah. Sorry, you missed this boat. I think you missed this boat because your inflection point happened in two places. Again, learn this. Something's in a bear phase. It sets up. The market's already been correcting. Now the market's starting to behave. That helps, knowing the macro picture. You see this thing start to accelerate. You see the 50 start to accelerate. You can get in right against the 50 on a recovery. Oh, man, I missed that boat. You can get in here on the accumulation. This would have been the day to get in with a stop, say, under this low right here. Now, it may go to the moon. It might. But I'm going to say it doesn't matter where it's going to go up. It matters how far can it go down. So for me, this would not be something that I would recommend. That's for me. I don't want to discourage anybody. Yoku. I'm in Yoku. We are all in Yoku. All my subscribers and our portfolio is in Yoku. Why? Actually, you know what, Paul? You tell me why. Why did I get into Yoku? I'm going to give you a second to respond to that because I know you know the answer. Was it because I saw options flow? No. Oh, somebody asked me before about put-call ratio? No, I never look at that. Above the 50, Maria, yes, give yourself a gold star. Absolutely. So when I saw, by the way, I like to look for these big reversal candles right here. This is more advanced, so I don't want to get into that now, but that always kind of triggers me into at least keep an eye on it. I also happen to really like this stock, Yoku. When it bottoms, Yoku bottoms. I've seen this happen a few times now. People are sending me private messages, but I'm not going to answer your private messages. I'm sorry, I can't. There's only so many things I can do at 9:30 at night when I've already put in about a 13-hour day. So I'm going to focus here. If you have a question, you can't put it here. I invite you to email me your question, mish@marketgauge.com.
I wouldn't recommend sending an email asking for the recommendation on all the stocks
like
you're doing here.
I'm not going to give you any private. Oh yeah, I'm not. I can. By the way, SEC regulations is I can't give you private stock recommendation on an email. You can tweet me. I can do it publicly. You can talk to me here, and if I don't get to you, I apologize. But I cannot answer your trading recommendation questions, SEC guidelines, privately on an email. Just get into big duty on that. Okay, so where was I? Yoku. So yeah, so I saw this break out over the 50 on this day. I waited for this day right here. I got long against this low right here. Sat around yesterday. You could see it's had some of these spikes, and I'm like, oh no, maybe I'm going to get stopped out. But I wasn't really risking very much. And then today, I actually still haven't gotten to my profit target, but there was a profit target in here if you were a day trader or a mini swing trader. If you're a swing trader, I'm waiting for a little bit more before I start taking profit, and the reason why is I think that we put in a nice little bottom here from 18 up to 22, which means I'm looking for 22 up to, say, about 26, which kind of makes sense with resistance, at least as an area. I'd probably take some off before that, but that's kind of my sort of mental target just based on the measurement of this type of basing. Okay, sorry, I had to take a breath there. Data. Yes, you've asked me 4 times now. I see your question. Data. Actually, this is a nice looking chart. Thank you for pointing that out. What is this chart? Tableau Software Inc. Okay. Haven't traded this one before. But it doesn't matter. It could be any instrument. I don't care what it is. I'm looking at the same thing over and over and over again. So what happened? We went into a death cross. We broke down. We broke down way before that. Remember I said I like these sort of middle phases? Once this took out the 50, this thing just really started to crack. You had a nice clue up here with a reversal candle, by the way. Those of you who are experienced traders would know that when you make a new high and close near the lows and you get followed the next day, it usually means trouble. Then they really had trouble when it broke the 50. So this was a great short, especially as it broke down under this point right here from several days before that with a good risk to the 10. Now, it's done something very similar to Yoku in a way, in that it's had some nice basing action, went into the recovery phase, which I didn't even see. Now, one of two things are going to happen. You've got to wait at this point when you're so close, just like I showed you with State Street, STT. This took out on an intraday basis the 200 but didn't close above it. You have to now wait for this to close above it. And I would probably say with this type of volatility, wait for 2 closes above it, then go in with a risk to the 200. Otherwise, if this rolls over, then you could have a good short risk to around the 200. Either way on this one. But you can see the 50 starting to turn up. The 10 is accelerating up. This is still neutral to slightly down. So right now it looks more up than down, but of course that can change. All righty, let's see what else. What does the Bollinger Band do for me? Well, the Bollinger Band is just a different measurement of what I was finding is this RSI, you can see this is a 2-day RSI, so it was getting overbought and oversold very quickly over a 2-day time period. This Bollinger Band gives me an RSI that's much slower over the course of 20 closes. So it just is a better, more step back kind of a view. And I've also noticed with this that when it gets, when it gets into the blue, it's very oversold. When the blue starts to cross to the peak, sometimes you get a really good inflection point in the chart. If I bring that down, you can see you got a little bit of a move off of that. Then it got a fake out. It stayed pink, 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 pink. Same thing conversely when it starts to get high in the yellow. Sometimes that means you have a peak high. But, you know, in this case, you also have to measure where the phase is. I wouldn't have even been paying attention to the peak highs and lows in this, considering where it was. To me now it gets interesting, and it's not overbought on either the Bollinger, close on the 2-day RSI. Just for the fun of it, let's take a look at the monthly. This is a new instrument. This had an IPO, obviously, this year, or last year, I should say. There's not enough information to give me any monthly or weekly moving averages. I use different time frames for weekly and for monthly, and I have none on here right now. So based on this, this looks interesting. Historically, especially when it was first offered, you've bounced off that bottom. You can see it had a big run. Looks like it may go up about 50% from its top to bottom. So that's another thing to calculate. If you say from 50 to 100, maybe it can go up to, well, it's actually close. Maybe you got another few bucks out of this, but you never know. To me, it's really going to be all about your risk, as I said to you before. Never try to guess where a stock is going. Just try to guess where you're going to be wrong if it doesn't go in your direction. I can't say that enough. TAN, you hit on one of my favorite. This is my prediction for the end. We're already long TAN in the Advantage account. That's solar. Good question. I love TAN. Love it, love it, love it. Guess where we got long? Down here. Why? I had a risk to the 50 and the 200. Double header. I love that. So now at this point you have to come up with a whole new point of risk. And you can see you have another nice little bottoming formation. Old-fashioned chart reading would tell me that probably you want it to hold now above 42 if you're planning to get in. At this point I'd probably wait for these highs to be taken out. Then it means you have about a $2 range of a risk. Since it has a range of about $1.18, that's 2 times the ATR risk, which means you want to be looking at this to make at least 3-4 times your initial risk. Do I think that this can get up to 46 and higher? Yes, very long range bullish, not only just for the technical reasons, but also for fundamental reasons. Okay. The blog isn't $197 a month. The service is, the blog is free. The premium service is $197. And as Jeff was telling you before, if you just wait till we come back, I'm taking a break next week, we're actually going to have a much better offer than that on an annualized basis. So I would wait. My advice to you would be wait just another week, especially since I'm going on vacation next week anyway. All right. I'm starting to get a little fatigued.
Look right under the person asking the question. I see it now. It's Trade Chick. Look right under the place where you're looking at that 197. So go to the mish.marketgauge.com, and then it's the only place on that page you could actually fill out your email right on the page without clicking Start Here or anything.
So I see. Well, Karen, you're just asking me about First Solar, SolarCity, SunPower. Yes, Canadian Solar, all of those, especially SunPower. Which, by the way, in my service, I do a 2000 every year. I do phases and forecasts recommendation for 2014. This was high on my list this year. SunPower. I like First Solar and the others, but I particularly focused on this one. Waited very patiently as this broke down, came back. We got long. We've had a nice run in this one. Now I'm actually in the ETF. At this point, this thing, just like I showed you before, looks a little extended. So if you're looking for a long-term swing trade on this, I'd rather go with TAN than this based on risk-reward. If you're looking for short-term trades, yeah, this has still got some punch to it, but you have to really watch your time frame. It's all about time frame. This is all the stuff that I teach, by the way, over and over and over again. Plus, when I make my recommendations, I will tell you this is for a day trade, this is for a mini swing trade, or this is for a swing trade. Jitu, I'm going to wait because I've already shown a chart that you've asked for. I'm going to look at Wild Bill because I like your name. Okay, LBYTA. Oh, did I spell that wrong? LBTYA. Okay, is Mish getting tired? Yes. Okay. Little nighttime dyslexia. This is also a relatively new instrument I'm gathering, Liberty Global. Okay. Well, I don't have any moving averages to work off of, so I'm just going to have to give you just good old-fashioned chart reading. Let me take a look at the longer-term charts on this, too, while we're at it. Oh, wow. So this has only been around for 4 months. Okay, when you're talking about something that's only been around for 4 months, and you have a month bar like you had last month, and you're working inside the month before, after a new issue, most conservatively, I probably would say at this point, you want to get in above these 2 months highs, and then you would have to find a new risk. So in this case, we're looking at, what does that look like, 46? So if we're looking at 46 as the new high all the way up here, that's one thing. I don't have information on moving averages, so it's hard for me to say. Otherwise, what you're looking at is you had all this consolidation that it just broke out of in the last couple of days. Maybe I would put a very conservative stop to the top of this consolidation right here, which also happens to be the top of this candle body on this day. It broke through it yesterday, confirmed today. That gives you a tight risk. If you wanted to risk all the way down here, you could. I would probably prefer to do it up here. And then you could have a small position if you wanted to hold on to it, and then you'd have a whole new ball game through the highs, I think. I don't know anything about this company whatsoever, though, so this is strictly technicals. Okay, who haven't, people are asking about, do I make more than 6 figures trading a year? Okay, Ford. Ford was my 2013 pick. In 2013, we made a killing. We actually bought Ford at like $7. Remember that, Jeff? In 2013, you know, I get like things in my head based on certain things that I see. I'm just going back to 2013 here with you for a second. Actually, it was even before that in 2012, come to think of it. I know I bought the rock bottom on this chart. And I think, I know why. It was right after the summer. I was in Denver, and Ford had the hybrid cars out. And, you know, By the way, I'm going to talk to the women out there for a second. Women, being one myself, I want to tell you something about yourselves. You have a unique gift. Hey, trade chick. You have a unique gift. And I'm not saying, guys, you don't have this too, but women have an inherent gift of being natural consumers. Looking at things when they go to a store, whether it's for the family or for themselves, and being able to bargain shop or see a trend that's coming, or just be able to tell that things are being snatched up or what have you. And it's that consumerism sort of flair that women have that I find intriguing, and I use it a lot. Okay, hey, Wild Bill, okay, you're a guy and you bought it $1. Well, I think you just bought it because it was cheap. But yeah, good call. Good call. And you still have it. Good for you. That's good. That's a long-term company, I think, especially as they get more into electric cars. But anyway, I went to this sort of outdoor food thing in Denver, and this guy was there with all these Ford hybrid cars. And I said, you know what? I think Ford is going to make a comeback. I said to my husband, you know, when we get back from vacation, this was in August, I want to look at that chart. And I saw that right before we went on vacation, it broke the 50, but it came back down. Came back, and I'm not kidding here, Labor Day weekend. It came right back to the 50. We got long on this day right here. Right here. And you can see that it never traded down there again. So let's now fast forward to where Ford is right now. Now, compared to General Motors, which of course has had a terrible year killing people. We have, recalls once in a while in Ford, but nothing too terrible. Well, I'm going to have to say the same thing to you as I said about a couple of the other charts. You kind of missed the boat. So if you have questions on charts, and if you want to wait patiently, and you've missed the boat on things, but you're a day trader, that's one thing. But if you want to be a swing trader, for these 50, 200-day moving averages, look for where they are relative to each other to determine a phase. Look to see if the phase is changing. Look to see where your price is versus your risk. Look to see where your slope is. Are things starting to accelerate? Even though this broke the 50, the slope was still up here in Ford, back in here. Then it took out the 200. Where's my risk now? I don't care if this gets a golden cross like it just did. My price is too far. So for me, I don't like the risk reward. I'm going to stay away from it. So I think no matter what chart I look at, I'm going to be incredibly consistent with you on the answer. So I'm going to start wrapping it up here a little bit because I actually, quite honestly, I'm getting really tired. I will tell you that we do these free webinars. I'm hoping Steve invites me back to do some more so that I can come back and talk to his audience again. About once a month or twice a month, if you get an email, you'll see I do these live trading with Mishes, and I always go through more charts and more information. So I invite you to join me, read my blog, talk to me on Twitter. You bought the package, come look at us when we do our big launch that we're going to do in July after the holiday. But again, just to sum up, watch your moving averages. They're simple. Watch your risk. Base it on the range of the stock. Try to get in at inflection points. Too far, move on. There's always something new setting up. I just gave you several examples before based on their proximity to the moving averages. Okay, so I'm actually going to have to stop. I'm so sorry, but I am so appreciative that after, oh my God, almost 2 hours, we still have 367 people in this room. I am honored and humbled by that, and I really, really appreciate it. But I hope I gave you a lot to noodle on. And I'm certainly not going anywhere. Well, I am next week, but then I'll be back. So I hope to see a lot of you again. And if you came to tonight and you send me an email, just mention to me that you met me tonight. That might get my attention a little better if I don't know who you are. And by the way, Steve and Jim and Becky, thank you so much, and Jeff, of course, for hosting this. It's been a lot of fun. I've really enjoyed being able to be here with you all tonight. I wish you guys a very, very good evening, good morning, depending on what part of the country you are in, middle of the night. Have a wonderful short week next week. Happy July 4th for those of you who celebrate. And peace out, everyone. Thanks again. Bye for now.
I'll stick around. This is Jeff. I'll stick around for a couple minutes just to make sure.
Hi, Mish. Thank you so much for all the incredible information that you shared with our group tonight.
And I'll stick around. This is Jeff. I'll stick around for a few more minutes just to make sure. I know a couple of you are still having a little bit of trouble getting in. I think part of the problem might be it takes a few minutes for the permission to get set. But that said, I'll stick around for just a few more minutes. Mish really needs to go after 2 hours, and you guys have been a great audience. You really got Mish going, and we'll see you there, and hopefully we'll be back in this forum as well, because Candlestick Forum has been a very, very gracious host. All right, so they'll probably want to close it down, but I've got a couple people here that I'm still making sure that the permissions are set up for. So if you're having any trouble, feel free to just put it in to my private message.
Thanks again, Mish and Jeff, very much. And everyone, Steve will see you in the chat rooms tomorrow. Everybody have a great evening. Thank you.